Hello traders, Gary Wagner here. Just after 10 o'clock in Honolulu, 4 o'clock in New York on Thursday, the 3rd day of July 2014, and this is the daily report for gold and silver. We do have the precious metals complex under pressure with gold and silver both trading lower today. First to gold, current print 1320.60, continuous contract of COMEX. The low on the day 1309.50, the high 1325.50. Silver also trading lower on the day, but it's only off roughly 2 cents on the day, current print 21.18. You can see it's come well off of these lows right in here. The low today, according to Kitco, 20.69, the high 21.27. More on silver towards the end of the show. Let's talk about our current trades first. Traders, what a week we have seen, what a couple of weeks we have seen in the precious metals markets as we have seen them rise to dramatic new price highs in terms of a 2-month high. Looking at a daily chart, this of the spot market of gold, you can see the market move right now, this red candle with this long low in here. Of course, we did enter a trade in the market. Our second trade, our first trade, of course, is we got in at 53 and either got out at 83 or got stopped out as we trailed the stop up. I gave you, our subscribers, the choice as to which one made most sense to you. Then when we re-entered the trade, and we re-entered at 1303, as the market went up, I made a suggestion of two distinctly different strategies. The first of which was to simply put a price order in to get out at 1330, in at 1303, out at 1330. That order was filled the very next day. Traders that took that strategy got out with this second trade that we've had, our second consecutive trade where we've had some nice profits during this upside rally here. The other strategy that I suggested would be to trail stops up. We, in fact, did trail them up. I sent out a notification yesterday, and let's put up the chart that I sent with that trade alert. And this is the chart here. The only difference was this trail stop was under here, but I wanted you to be able to see the lows. Traders that are still in the market, I have had emails of, I would have to say at least 50% of our subscribers got out at 30, 50% or less are still in. For those that are still in, we did trail the stop under 1311. You can see that your stop is still intact. We'll have to see, of course, we've got the 3-day weekend coming up. We'll have to see what happens, of course, on Monday, if this market will continue to retrace or if we're going to see a similar market move like we saw here. In other words, we had the market trading roughly at 1240, moves up to this high of 1280, exactly a 61% retracement. Then it moves up again and it has retraced slightly. Now, what is the actual retracement that we've witnessed so far in this move right here? And to do that, let's go ahead and calculate that retracement. So traders have done just that. I've pulled up a daily chart. Again, cash market chart. We have our first fib retracement, which goes from this bottom here to this top here, 61% retracement, perfectly in alignment. Now, the second clip of this move, or the second wave of this move, impulse wave, I should say, we've got to fix the low here because that is where the rally begins roughly at 1257 and goes up to 1333 here. So a 33% retracement, or 38, excuse me, would be at 1304, and we've certainly not hit that because, as I said, the low is roughly 1309.50, right in that area. So if we are going to see more downside, we could easily see a test 1304. That to me is a pretty critical area that it would need to hold because, of course, the next level below that would be a 50% retracement, and that would take us below 1300. So we'll have to see how this market really unfolds through next week. So traders, we're looking at a Japanese average chart. We'll go ahead and blow that up in a second. Again, it's still our daily chart. What we're trying to ascertain is this particular top here doesn't really line up with anything. And we've talked about this before because this top, what we can see is this. We see that as the market came down, we had this being a supportive area. We also then had it as an area of resistance, and close to an area of resistance because, of course, these stops are well above this. But in terms of historical technical evidence why this might be important, I draw our attention to this particular area on the chart right here, in which we see this price point really acting as a couple of things. First of all, support here, resistance here, and most importantly, I should point out, this prior top at 31, because I think that that's genuinely what we're seeing. Now, what is my sense, or what am I looking for this market to do? Well, we had a dramatic price rise. There's no doubt about that. And we've definitely changed a couple of things around. Stalled out just above this top that we had before. And as you know, my daily subscribers know that we have been, in terms of our particular strategy, looking at 31 as where I thought resistance would come in, and we would actually see a little bit of contraction or profit taking in the market. We're never sure, and that's why I present both strategies to you and leave it up to you, the subscriber, to work with it. In either case, we are getting profits. Of course, we're getting much better profits, picking our price point above the market. And that's because we've been accurate in predicting where that resistance is going to come in. But we never really know what the future is going to be. And so I want to present you with options and opportunities and have you act accordingly to do what feels most comfortable for you. We are looking at a 2-day chart. This chart has our Andrews pitchfork, and I haven't looked at it in a while. I had one of our subscribers email me and ask me if we could pull the chart back up. We looked at it yesterday a little bit. Want to take and look at it again. My reluctance with this particular chart was the fact that I got faked out when the market broke through this particular point. I felt like the boy that cried wolf, and that was the top of the market just prior to coming down. Once it came down, of course, it found really strong support on this cascading channel right in here. But for the second time since this market really has been in this defined bear market, we've got another attempt, and it is breaking above this. Now, here's what I'm looking at. It is cascading channel line. If, in fact, we do get a further corrective action in the market, and at the same time, that corrective action that we're looking at stays above this particular channel line, this being our 0, this being our 100, that's really boding well for the fact that we could, in fact, finally be out of this bearish scenario and we are moving into a bull market. And what that would mean is that these recent rallies we have been experiencing are really not a counter trend, but a new trend, and that trend is to the upside. Which takes us to our next chart. This, of course, is a 2-week chart. It has our Elliott wave count. And we haven't really visited Elliott wave and our wave count in some time. Most importantly, the reason that I will omit that or not focus on it is I focus on it when I believe it's useful and will benefit us and give us insight that we're not getting anywhere else. When I think that we are in an area in which the market could genuinely move either way, I want to hold my judgment off until I have the technical data to support, the evidence to support our basic hypothesis and assumptions in terms of where the market's going. The real question has got to be, have we ended this bullish scenario? Of course, the way I'm looking at it in terms of a grand scheme are these major moves, 1, 2, 3, this major M4, and my sense was that it terminated right here, but then we got this top in here at 1391, but a case can at this point be made for what we're seeing in terms of a minor count underneath this as being something like a 1, a 2, and we are in our third wave right here. If that is the case, we will know that for a couple of reasons. First of all, what we will have to see is the market, of course, break above 1331, and it has to break above 1391, this top, this genuine top here. And if it does that, that's further technical evidence that we are now in a bull market. Up until this point where we saw it challenge these areas, we couldn't make a definitive statement one way or the other, except to say we're probably still looking at these rallies as counter trends as opposed to a change in trend. Now, traders, when we look at a bigger picture, and to do that, I've pulled up a weekly chart, Japanese average format. I'm going to try to look at it in both ways, but Body size has eroded, no doubt about that. But we still have the lack of these last 2 weeks, do not have these lower tails, and it is a decent body size. It's not these small candles like we're getting here. However, it becomes a little less certain when we take a look at this market through the eyes of a standard candlestick chart with true opens and closes. So I draw our attention. Here's our Three River Morning Star. Really good solid signal. Our confirming candle, very, very strong. Now, the last couple of weeks, if you notice, we have made higher highs, higher high, higher high. We've made higher lows. We've had weeks that have closed above where they've opened, so they're green candles. But when you look at the body size, you can see that any kind of strength we had at the beginning of this rally, even if it's going to sustain and continue, we've seen the market kind of wane, and we're definitely witnessing a series of profit taking, of which some of us have participated, some of us are still sitting long. In either case, we have a stop in the market that will protect us, protect our equity, protect some of the profits. And my sense is that if 1304, 1305 holds, that area should in fact hold. I think it's a pretty critical area. We should see the market rally up from there. As I said, we'll have to see how this unfolds next week. Traders, what about silver? We had the same philosophy with silver. I presented you with two different strategies. Traders who exited the trade, you exited the trade up near the highs, you pulled some good profits. For those that are still in this trade, I recommended that we trail our stop under 2080. That's this horizontal line here. And that absolutely held through the trading session. As you can see, we are sitting well above that. Now, you'll notice it's really, really closed very, very close to the open, this tremendous low. So we're getting that increase in volatility. We're looking at Japanese average charts. Let's go ahead and erase this and also talk about the fact that if we convert this back to our standard candlestick chart, which we'll do right now, you can really, really get a sense for the dramatic round of profit taking that we've had today. Now, another thing once we look at these candlesticks is that when you take a look at this bottom area, this 2080, you can see we've had a couple of lows that have gone in there, specifically this low here and this low here. But since then, we have maintained our price point above that, effectively closing well above it, but even the lows have been above that. So what am I looking at? We're going to have to see if this market wants to correct, because if it corrects, we could get a decent sized correction before moving back up. But my sense is we probably will make a play for the $22 or at least $21.80 before all is said and done. I want to wish all of our subscribers in the United States, mainland, Hawaii, Alaska, a very, very happy Independence Day. For all of those around the world, I want to wish you a great weekend. We will be absent tomorrow as the markets are closed here in the United States. We will be back on Monday. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.